You want to know how to get a mortgage payment 3% below the current going market? There's a new loan feature we've been using since May of 2022 to help buyers save literally hundreds of dollars in their monthly mortgage payment. It's called a temporary interest rate buydown, and we offer two versions of it, the 2-1 buydown and also the 3-2-1 buydown. And in this video, I'll review the benefits of utilizing this buydown. I'll also get under the hood and go over the mechanics of exactly how this loan program works. But before I get into all that, I want to make you aware that this is a feature that can be an add-on to any fixed rate mortgage product. So for example, we can use this buydown feature on a conventional loan, on an FHA loan, on a VA loan, or even on our 24-month bank statement loan. So no matter which loan you qualify for, you can take advantage of this buydown feature and save yourself hundreds of dollars in your monthly mortgage payment. There's just so many benefits to this feature, but my three top benefits that I want to share with you guys right now are as follows. Number one, it's obvious. It saves you hundreds of dollars in your monthly mortgage payment over the first 3 years of the life of your loan. It allows borrowers like you to have a comfortable payment even in a high interest rate environment like we're sitting in today. Number two benefit, it buys you time. This one's a little bit outside the box, but think about it. With the lower initial payment, it gives you time to get to a future date where rates are lower than what they are today, so you can refinance, get a lower rate, lower payment in the future. It's like a bridge in time to get to the next refinance boom where you can refinance at a better, lower rate. Number three, it gives you the confidence to buy your dream home in today's market where every other buyer's scared because rates have gone up so dramatically in the past 9 months. The buyer experience today is way different than what it was in 2021, way different than what it was in January, February, or March of 2022. We've got more inventory on the market, giving you more choices. You can make an offer at list price or below list price. You can ask the seller to give you concessions towards paying your closing costs or the buy down account. No longer do you have to waive an appraisal contingency. No longer do you have to waive your right to a home inspection. How crazy was that? You can even ask the seller to make the needed repairs necessary. With fewer competing offers, you'll have the leverage. You can make an offer and get your dream home at a fair price today. You no longer have to wait because you're scared. You can buy now. So let's look at an example of how the numbers pencil out on a 3-2-1 buydown, and I'll get into some of the mechanics of how this works as well. I put this slide together for you guys, and in my example, I'm using a 3-2-1 buydown in conjunction with a 30-year fixed conventional loan. The sales price is $500,000. 20% down, that would make the loan amount $400,000. Now, you can buy with less than 20% down. You can put 5% down, you can put 3.5% down, but for this example, I use 20% down. And the note rate that I'm using is 6.5%. So how it works is in year number one, the payment is based on 3 percentage points lower than the full note rate. So in this example, the payment in year number one is based on 3.5% interest rate, and that produces a principal and interest payment of $1,796 instead of what the full payment would be at the 6.5% rate, which would be $2,528. It saves you $732 a month in the first year of payments. That's huge. In year number two, the payment's based on 2% below the full note rate, which makes a principal and interest payment of $2,026, and it saves you $501 a month in the second year. In the third year, the payment's based on 1 percentage point below the full note rate, which produces a principal interest payment of $2,271, which saves you $257 a month in the third year. So you can see in the first 1, 2, 3 years, you save hundreds of dollars every single month in your mortgage payment, and that's the big benefit of using this buydown feature. Now you might be asking yourself, like, how does the lender allow this to happen, or how does it make it possible? Well, it's simple. The payment that the borrower makes during the first 3 years versus the payment that the end investor wants to collect, that difference needs to be collected up front for year number one, year number two, and year number three. In this example, the total amount of money needed to put into a buydown account which is what we hold the funds in. It's kind of like an escrow account, but it's called a buydown account. The total amount needed is $17,888. That's the total subsidy amount we need to put into our buydown account to make this particular loan product available and make it work for you as a buyer. Now, the money needs to come from an interested party to the transaction. Who do you think that could be? You guessed it, the seller. The seller is allowed to contribute the funds necessary to make the loan work. Now, you're gonna need to negotiate this into your purchase contract, and it's simple. All you gotta do is add the following verbiage into the additional terms of your offer. Quote, seller agrees to contribute $17,889 towards buyer's buydown account and closing costs, end quote. With this verbiage, you've successfully added the ability for you to use the 3-2-1 buydown feature. You added it to the terms of the contract. And now you can take advantage of having those lower payments that I showed you on the slide for the first 3 years of the life of the loan. And it gives you the time to get to a point where you can refinance to maybe potentially a lower rate. So simple as that, you can add it to your contract. Now, there's probably a lot of things going on in your mind. Your wheels are spinning. You might have a lot of questions. So I wanted to end this video with a couple of the most common questions that I get from my borrowers and my real estate agent partners. So probably by far the most common question, number one, is this an adjustable rate mortgage? And the answer is an emphatic no. This is a fixed rate mortgage. The rate and the payment stays the same from payment number 1 all the way through payment number 360 for the life of the loan. Common question number 2. Well, Norbert, what if rates drop and I can refinance to a lower rate before the 3rd year is over? You can always refinance the loan. There's no prepayment penalty. So if rates get better next year, we can take advantage of that, refinance it, pay off this loan, and boom, you've got that loan fixed in at a lower rate, lower payment moving forward. Frequently asked question number 3 kind of piggybacks off question number 2. What happens to the money in the buydown account if I refinance within the first 3 years? Well, my friends, that's the best case scenario ever. Why? Because you have the ability to refinance, get a lower rate and a lower payment, and you still have money in your buydown account, which then gets applied to reducing your principal balance on your new loan. In other words, you don't lose the money. It goes to reducing the principal balance should you refinance within the first 3 years. So there's no way to lose the money for you in that first 3 years. Number 4, why would a seller do this? Many people say, why would a seller ever do this? Well, in a market like the one that we're in today, it can give the seller the edge to market their property with a lower payment, creating more interest, more eyeballs, and more views on their home, which could give them the ability to sell faster at a higher price. And by the way, it's way cheaper to contribute towards a buydown account versus trying to lower the sales price. In the example that I gave in the slide, the sales price was $500,000. The payment in year 1 was $1,796 with the 3-2-1 buydown. In order to get the same payment by reducing the price, the sales price would need to be reduced by $115,000 to get that same payment of $1,796. So way cheaper for a seller, right? So I hope that this video provided you with a lot of information. I hope you feel like it brought value. If you do, please share it with others. And of course, hit the like button in this video, subscribe to my YouTube channel for future other great videos such as this. And by the way, if you're a real estate agent and you're watching this video, feel free to use this video as a tool to help your buyers and sellers better understand how this awesome loan feature works. I want to say thank you for taking the time to watch this video. I truly value your time and I appreciate your time. And thank you very much again for watching it. Until the next video, I'll see you all later. Bye now.